Welcome to TalkTickers. We cut through the earnings call noise, really digging into what matters for you.
That's the goal.
Today, it's Cummins Incorporated. We're looking at their first quarter for 2025.
Right. And the headline numbers, well, they tell part of the story.
They do. Revenues dipped a bit, yeah. But if you look closer, there's actually some underlying strength there. And definitely some mixed performance across the board, plus growing worries about the economy.
Exactly. So Q1 revenues, they came in at $8.2 billion. That's down 3% from last year.
But, and this is key, that includes the Atmos divestiture from last year, right?
It does. If you pull that out, underlying sales were, well, pretty much flat, almost flat.
Okay, so flat sales. But the earnings picture, that's where it gets interesting.
Definitely. The reported EBITDA was $1.5 billion. That's 17.9% of sales.
Which sounds lower than the $2.6 billion last year.
It is lower, but last year's number had that big one-time gain baked in from selling Atmos.
Ah, right. So apples to apples.
If you adjust for that gain and also some restructuring costs from Q1 24, their adjusted EBITDA actually improved.
Improved how much?
It went up to $1.5 billion, or that's 17.9% margin, compared to an adjusted $1.3 billion, or 15.5% margin in Q1 last year.
So hang on, flat-ish sales, but better underlying profitability. That's pretty good management, isn't it?
It points to some real improvements. They mentioned things like higher volumes in power gen and aftermarket, getting better prices, and just running things more efficiently. Good cost control, too.
Okay, let's break down those segments then. Where did that improvement come from? The engine segment first.
Sure. Engines saw revenues dip 5% to $2.8 billion.
Okay, a dip. But what about the margins? You said profitability improved.
That's right. The EBITDA margin there jumped quite nicely, actually, from 14.1% up to 16.5%.
Wow. What drove that?
It was a few things. Better pricing, especially with their new products coming online, stronger aftermarket business parts and service, know, and like I said, just operating better and keeping costs in check.
Got it. Now, the components segment seemed to have a tougher time.
Yeah, that one saw a bigger drop. Revenues down 20%, landing at $2.7 billion.
And margin?
Slipped a bit, too. EBITDA margin went from 14.8% down to 14.3%.
Any particular reason?
Mostly weaker demand for on-highway trucks. And again, that Atmos separation had a bit of a lingering effect there.
Okay. Let's shift gears. Distribution segment sounds like that was a brighter spot.
Definitely. Strong growth there. Revenues up 15% to $2.9 billion.
Nice. And profitability.
Also improved. EBITDA margin climbed from 11.6% to 12.9%.
What was working well for distribution?
They saw higher volumes in power generation. The aftermarket was strong again, and they managed some favorable pricing.
All right, but the real star, it seems, was power systems.
Oh, absolutely. Record results for power systems. Revenues jumped 19% to $1.6 billion.
19%,
True.
And the margin must have followed.
Followed and then some. A huge leap in the EBITDA margin. Went from 17.1% way up to 23.6%.
23.6%. That's massive. What's fueling that fire? Just data centers.
Data centers were definitely a big part of it, yes. We hear that a lot these days. But Cummins said it was broader than that. Strength in rebuilds, improvements across other applications too, plus operational gains and, again, good pricing. It's really firing on all cylinders.
Interesting. So not just a one-trick pony there.
Seems not.
Okay, finally, Accelera. That's their newer energy tech segment, right? E-mobility, hydrogen?
That's the one. Revenues there were up 11%, hit $103 million.
Still relatively small, but growing. What about the bottom line? Still losing money.
Still in the red, yes, but the loss actually shrank. The EBITDA loss was $86 million, down from $101 million last year.
So progress. Moving in the right direction, at least.
Exactly. Sales of their electric solutions and electrolyzers are gaining some traction. It takes time to scale these things.
Right. Okay, let's zoom out a bit. Geographically, how did North America look?
Overall revenues in North America are down just slightly, about 1%.
And within that?
Some definite weakness in trucks. Heavy-duty truck production was down significantly, and Cummins sales followed. Medium-duty production was also down, though Cummins didn't fall quite as much there.
Any other weak spots?
Yeah, shipments to Stellantis for the Ram pickups, those were down too.
But there was a bright spot you mentioned earlier.
Yes, power generation. North America power gen revenues were up 12%, and that ties directly back to that strong data center demand we talked about.
So a mixed bag in North America, trucks down, data centers up.
Pretty much sums it up. The traditional on-highway market is facing pressure, but Anything tied to digital infrastructure is looking strong.
What about internationally? Overall down 5%, you said.
Correct. But the picture varies quite a bit by region.
Let's talk China. That's always a big one.
China, including their joint ventures, actually saw revenues increase by 9%.
Increase. Despite global slowdown worries. What drove that?
Strong domestic demand, data centers, again, big driver there.
Yeah.
Also, domestic infrastructure projects. Those help to offset weaker demand for exports out of China.
Interesting. What about their core markets in China, like trucks and construction?
Well, overall truck demand was down slightly, but interestingly, Cummins actually increased their truck engine sales there.
How they manage that? Market share gains?
Potentially. Or maybe their product mix fit the demand better. And excavators' demand was up significantly, and Cummins' sales for excavator engines were also up significantly.
Yeah, and power gen in China.
Exploded, up 68%. Massive growth.
Wow. Okay, so China's holding up surprisingly well, maybe even strong, driven by internal investment.
It seems so. They're really capitalizing on that digital infrastructure build-out and domestic construction, too.
What about India?
India was the opposite story this quarter. Revenues, including JVs, were down 14%.
14% down. Why the drop?
Mostly power generation again, but for a different reason. They had a big pre-buy last year ahead of new emissions regulations kicking in.
So pulling demand forward. Made for a tough comparison this year.
Exactly. People bought early last year, so demand was naturally lower this Q1. Truck production in India, meanwhile, was about flat.
Okay, makes sense. So regulatory timing really hit the India numbers this quarter.
Yeah, it created a bit of a temporary dip.
All right, let's pivot to strategy and, well, the big cloud hanging over everything. Uncertainty. Cummins talked about their Destination Zero strategy, right?
They did. Pushing forward with that. They mentioned launching new engines like the X10 and the B7.2. Investing in the future.
And acquisitions.
Yeah, they bought assets from First Mode. That's for developing retrofit hybrid systems for things like mining trucks and trains, trying to bridge the gap to zero emissions.
And Accelera had some news too.
A big deal, actually. They're supplying a large electrolyzer system for a BP green hydrogen project over in Germany, so making strides in those future tech areas.
So strategically, they're still investing, still moving forward on their long-term plans.
Absolutely. They're not letting the current uncertainty stop them from investing in where they think the market is going.
But that uncertainty, it seems like the dominant theme right now, especially around trade and tariffs.
It really is. They were very clear about the significant uncertainty impacting the pace of global growth, mainly because of these increasing trade tariffs. They withdrew their full-year financial guidance.
Wow. Pulling guidance entirely. That speaks volumes, doesn't it?
It does. It signals a real lack of visibility. When things are this volatile, especially with tariffs potentially hitting capital goods demand, forecasting becomes incredibly difficult. They basically said, we can't confidently predict the full year right now.
They mentioned the U.S. administration's focus on American manufacturing, appreciated it, but also flagged risks, right?
Yeah, they pointed out that even with that support, tariffs on imported components and materials could still disrupt their supply chain and definitely increase their costs.
It shows how tangled everything is globally. Even a U.S.-focused company relies on global parts.
Exactly. Very few manufacturers are completely insulated from these kinds of trade issues.
And it's not just tariffs creating uncertainty. What about regulations?
Right. North American emissions rules for 2027. That's another layer.
What's the latest there?
They expect the new NOx, the nitrogen oxides rule, to go ahead as planned. But there's still some question marks around the greenhouse gas, the GHG regulations. They might get revised.
And how's that impacting things now?
Well, partly because of that uncertainty and the general economic worries, Cummins said their recent order intake has actually been weaker than they expected.
Weaker orders. And they don't expect the usual pre-buy later this year either.
No. Typically, ahead of new regulations, you might see customers buying older spec trucks to avoid the new costs or tech. But with all the economic and regulatory fog, they're not seeing signs of that happening in the second half. Too much ambiguity.
So, multiple layers of uncertainty hitting them. Economic, trade, regulatory.
It's a challenging mix. But they did emphasize, their strong balance sheet and their experienced leadership team. They feel equipped to navigate it.
That financial strength is definitely a cushion in times like these.
For sure. It gives them room to maneuver.
Okay, so let's try and distill this for listeners following the markets. What are the key investor takeaways here?
Well, first, that power systems segment performance, record results, record profitability. And importantly, it sounds like it's broad-based strength, not just data centers carrying everything. That's a major positive.
And the aftermarket.
That too. The resilience of their aftermarket business across different segments seems like a real source of stability and good margin.
So power systems and aftermarket are the big strengths right now.
Definitely foundational pieces as they face these other headwinds.
And the big headwind, the main concern.
It's got to be the uncertainty around tariffs, what they'll be, how widespread, and crucially, how they'll impact demand, particularly for the on-highway engine and components businesses.
And the timing lag too, right? They might incur costs before they can pass them on.
Exactly. That lag between getting hit with tariff costs and potentially adjusting their own pricing could definitely squeeze margins in the coming quarters. That's something investors will watch closely.
How are costs flowing through and what's happening to demand in those core markets?
Those are the key questions.
And one more layer of uncertainty you mentioned.
Yeah, that Section 232 investigation, the one looking at imports of medium and heavy-duty trucks and parts, and whether they pose a national security risk.
How could that impact Cummins?
It just adds more complexity. Depending on the outcome, it could shift the competitive landscape, impact import costs further. It's another variable for the whole industry, really.
Okay. A lot to track there.
No kidding.
Right, let's shift to our This Is Not Financial Advice segment. Time for an outrageous but plausible trade idea.
Always enjoy this part. Let's hear it.
Okay, so we keep hearing about data centers, right? Cummins seeing huge power gen demand, especially in China, up 68%.
Yeah, that number jumps out.
So instead of chasing the data center builders or the chip makers, what about the companies building the actual power grid infrastructure needed to support all those data centers, specifically within China?
Interesting angle. Go on.
Think about it. All those new AI data centers need massive amounts of reliable power. That means upgrades to high voltage lines, substations, grid management, the whole backbone. The outrageous idea is explore a long position in some key regional players in China that are focused purely on building and maintaining that critical electricity grid infrastructure.
So betting on the picks and shovels, but for the power feeding the digital gold rush.
Kinda, yeah. If data center demand keeps booming there, these grid companies could have years of work ahead just keeping up.
Okay, plausibility. I can see the logic. The demand for power is exploding, but outrageousness and risk.
Oh, absolutely. High risk. This is purely hypothetical, obviously.
It's extremely speculative. You're talking about investing in specific Chinese infrastructure companies that carries enormous risks.
Like what?
Well, regulatory risk is huge. Chinese government policy on infrastructure spending could change. There could be specific hurdles within the power sector itself. And then there's the whole layer of geopolitical tension, potential sanctions, trade issues. Anything could impact these companies negatively.
Good points. Very, very speculative.
Absolutely. Requires intense due diligence. You need to understand the specific companies, their government relationships, the regional dynamics. It's complex.
So let's reiterate. This is not financial advice, not a recommendation to trade anything, just a thought experiment.
Definitely just a thought experiment. Do your own research, understand the massive risks involved.
Crucially.
All right. So that wraps up our deep dive on Cummins Q1 results. The main takeaway, underlying strength, particularly in power systems, is definitely there. But it's overshadowed right now by some pretty significant economic uncertainty, mostly driven by those global trade tariffs.
And that uncertainty led them to pull their full year guidance, which really tells you how unclear the road ahead looks, especially for the on-highway side. The next few quarters are going to be really crucial to watch, aren't they? See how these pressures actually play out. So we want to hear from you. What are your thoughts on these tariffs and their potential ripple effects on industrial companies like Cummins? How are you thinking about positioning your own portfolio in this kind of environment? Let us know.
Join the conversation.
And just one last time, remember, everything we discussed today is purely for informational purposes. It should definitely not be taken as financial advice.